So I was looking at a monthly perspective here, right? And I want to show you something here. I'm just going to remove what's here right now. And we're just going to go to any random beginning of the year. That is what we want to do. So now we are taking it from a big frame all the way down to a smaller frame, or what we are doing is we are using the same rules that we use in the smaller frame in this big frame as well. So give me a second, okay, so the same rules right here. So the whole year here is all the way up until here. So if we look at this is the first 3 months of the whole year. So this is basically our Asian range. So the low, the high, and 50% as well. So we see right here in May, this goes all the way below 50%, all the way expanding higher till the end of the year. And another thing is, even in April, just after this 50% was created, it was already coming from below this 50% here, headed to this high. So it did that right over there. And then this year, this month here, if you think about it, it's because this was already above this high. Just like our Asian range, we say you can sell above that high. This is what was provided there all the way down to 50%. Here finding our PDR raise heading higher. Same here, it retraces to the 25%. This is still in a discount. This might be where the move started, but you might find that your trade was actually, or your entry was exactly by that high, going all the way higher. And then this PDR rate that was here was the only PDR rate that was left throughout this whole mess here, or this whole push up, and it was created just the law of that fair value gap is exactly by that high right there, and it goes into that and then it ends the year. So this already here, and here followed the rules here. So this might have been a continuation up move, because back in these days Nasdaq was always pushing higher and higher and higher. So another thing we look at here is, here there's already this previous year liquidity that's left here, and then when we're looking at the first 3 months again, the low, high, and 50%, we find that right there. And then April as well, we see this above that 50%. Taking off these wicks here, we have this fair value gap here, and we have this breaker right here, and then we see that move from above 50% all the way down. We come here and we find this move, and this move exactly on the low, and then from below that we see that move all the way back to the high, to the low, and then from the low as well, we see a push down up until the year ends right over here. So below this low as well, we'll be looking for a push up, because if you look at this and this was already near this low, so you can say it started with this move down here, and then as soon as these months began here, it was a good time to look for a push up. Why? Because we are cheaper than the first initial liquidity that's created in this scale. And then same thing in the previous year. I think the previous year was even nicer in terms of looking at it like that. So get our March right there, our January right there. I'll remove that. So right here from the low all the way to the high, we see right here April all the way below 50% in this low. The next month below 50%, just a bit, and then this push higher. Next month opens up, goes and accumulates orders around that high, and then we find that push higher. Above that, we find this push lower, and then this month as well starts all the way from above this, finds a push all the way below 50%, and then it starts pushing higher as well. Above this high here, we find this push down to go back to the high, all the way back high again, and then the year finally ends right here. So it means now this same concept is simply pushed to this and currently this, but this is still has space to move around, so it can end up closing down here. But the thing that we want, or the rules that we want to apply here, is we want to find the range in the first 3 months of the year, and then that basically gives us a bigger frame of where the market will be headed. So right now, currently, we still got 21 days left for this candle here to actually show its whole price. And then after we go in, so this currently is not available, but what happens here is when we go into the weekly frame, we start looking at it like this, meaning we start looking for the first week of the month like this. So this is 30 December, 6 Jan. So this is the first. All right, let me do that. So this is the first week of Jan, and this is where January ends right here. So if you look at this, you can clearly see that the second week of January was below that low, meaning it's creating buy movements, and then we see that push higher, and then this continues higher, takes out that high. Above that high, it starts looking for movements lower. It gaps lower here. From here, opens up here, and then we find this push higher above that high again, and then push all the way below. And then we go all the way higher, back to 75% of the whole range, or back to 25%, we can say. And then what happens is in the new month here, we gap all the way. So this is already a new month here. So this is the other first week. Okay, wait, let me see. One, two, three, four. 1, 2, 3, 4. All right. So this is the first week of Feb right here. So we see that this week, this first week of Feb actually kept lower because it closed right here. And then we see this opening down here. So we had a gap lower here. Right over there. This was our gap lower. So now we see that this kept all the way below previous range, what 50% right there, all the way down to 75%. So that doesn't matter, but it can actually help you figure out, all right, it can actually help you figure out where you are in the marketplace. So you can be looking at it in terms of saying, okay, I'm above, I'm below previous month range 50%, while I'm still below my initial range for that very same month. And then it gives you a cheaper discount, or you can be saying I'm above previous range high while I'm above current range high, and then that gives you a much nicer premium to look at. So what I'm basically saying here is I'm gonna put back this range here. So since this is the new range here, since this is the new range around this time up until here, we see this going above this first week while it's above this first week. So this kind of creates a, I don't know what to say, but this is a much nicer premium in price. And then the other thing is you find it above previous month. And looking at this high here, this and previous year's high as well. And then you start seeing that push down. But this is just like your Asian range. This gives you your validation to actually start looking for a move lower, or you can look for a PDR rate that's left here on the high so that you can look for the push higher. But here, while it's above these highs like this, it's signaling a push lower. And then that is a, so I'm gonna take this view here, and then we're gonna go into the daily view. Right here with this. So let's say we left out this data here. So these fib levels that are here, they are created because of this first week of Feb. Again, don't forget. So from this low to this high, that's our first week of Feb. So this is when this whole range was created here. And then we take that, apply to the second week, we see this on 50% going higher, right? But if we look at this in a smaller frame now, what we do is we take that and we put it on this. So this whole move right here should be ending when the month ends. So this whole range is to work for all of this price right here, or the whole month. Since this range here is the first week of Feb, we are looking at it like our Asian range for the whole month here. And then your Monday as well, so meaning every single Monday. So this range that created the, or this range that created the first initial liquidity for the whole month, it still has a Monday in it. So you can look at it like this. Okay, let me do this. And I'm gonna try and change that into lines. I'm just gonna delete these after this whole thing. So this Monday here, which is the first week again of Feb, so you wouldn't have these levels right here on this here. So this will give you your range for this week right here, not for the whole data right here. This can also show you levels as well, where there might be PD arrays or whatever data that you want to see later on in the future if you leave them on. But this can signal you here for this trade that's below 50%, which is on a Tuesday and a Wednesday. You get this trade. Thursday, Friday, you get a retracement back to that high. And then here we already have a new week, which is gonna be analyzed using this range here. So right here, this week, we see this Monday here dropping down to 50%, meaning it's in a discount, we can say. And then let me do that. We see here on this Monday of that very same week, Tuesday, Wednesday, we see the move. Okay, Tuesday, we see the move below that 50%, and then we see a move higher above 50%. It drops all the way lower here as it opened up below 50%, 75%. And if you look at this, there was a new week opening gap that was here because again price closed right there and it opened up down there. So that's our new day opening gap aligning with our 75% below the low. And then we find this buy here in the 50% of that, and then that move higher. So up until Friday, which is right here, this move started here all the way higher. When we get to this new week, again, what we are looking for is the Monday of that week, like that. And let me make this smaller for this. And we are deleting that. So again, this is the whole range we are using for this whole month up until right here. So right here we find our Monday. Tuesday hits that Monday's range high, creating premium price while it's above December's or last year's highest high. So this is the most expensive price that was created last year. The minute you go above that, your price is automatically expensive because it's much more expensive than this price now, or this price, or any other lot that was left along the way. So it's created a premium price to actually start falling from. So we see this Tuesday going above that, and then it hits the low. Wednesday does the very same thing, then goes and hits the low. Thursday goes above 50% and goes all the way lower into this PDRA. Friday opens up, goes above 50%, then a huge push down. And then we see another Monday here. So right here we're still using this big range right here for its 50%, its 25%, and such. So let me do this. Here we see this Monday, Tuesday right here on the low, Wednesday on the low as well. Thursday it falls short just a bit of that, and then we see the push lower. And then Friday below that low here, it hits Thursday's low and then starts going higher. It closes exactly on this low. And then now we see a new, we see a new wick here, which is this Monday now, and this. So already right here, this is terminated like that, because that was the first week of what? Those levels can still produce something by them, but right now they are terminated. And then first week, which was last week, that week that we had, we saw Tuesday going all the way below that and going all the way higher above 50%, and then closing down by 75%. This opens up, goes all the way higher above 50%, and then hits the low again, and then below that it goes all the way higher, and then Thursday it fell hard. Friday fell short a bit of that low and fell. So this right here and what was right here is the exact same thing. So right now we currently have this right here. Why? We have that because, all right, I wanted to delete this. Right here, what we currently have is this high to this low. Why? Because this is the first week of March. So these levels are our important levels right now. And what I'm expecting is it would be nice to see some sort of push below this low. And that would happen, let's say, if this Monday right here creates some sort of range, maybe like this. And then we see Tuesday hitting that low, going lower, Wednesday starting to push higher, Thursday higher, Friday higher it goes maybe for this month, or it can simply just continue lower in terms of it creating this range, going above the high, and then all the way lower, goes above 50%, and then hits that low again, and we continue low. So this right here is seen by this Monday. That's why some Mondays are very important to actually study that data. This week wouldn't be a tradable week if we did not have this sequence or this fractal nature of analyzing in the small parts here. So we could trade in this week last week because there is a Monday that we can use to find the initial liquidity of the month of that week, but the initial liquidity of the month is what we were trading, or what we were creating last week with that movement. So this here is actually to play out whatever is gonna happen the whole of March. So up until right there, this is the range that is gonna be used. But this day today, after it closes, we will still use that as our range right here. And then again, another thing that we did not check out, that we're gonna check with last week's price, is the Asian ranges in the pricing. So this was our initial Monday move here. So if we look at that again, 8 to midnight, clearly we see that we see this move in the London going below 50% of that range, then the push higher, and then above that we are creating a push lower because we are above that. And then this as well goes just above that high right there, this above 50%, and then we see the push all the way lower. And then this next day right here on this Tuesday, we see our range low, our range high right there. Right here it hits that high, and then we see a move lower just by 50%. There was a fair value gap created here, takes the high as well. Here again comes back, the Wikipedia raise here, it hits that here as well on the low, and then it continues lower. And then while it's below that New York session, it starts moving back higher. So this range already has worked its purpose again. And then following day again, so it's the same sequence, same rules, no change in whatsoever you're doing. So right here, London as well takes that high in this fair value gap here, and then we see a move lower even here. New York session above 50%, lunch here below that Monday low. And another thing you should look at is here it went below Monday lows, and then it made this push all the way where above 50% of the Monday range in that order block. And surprisingly, we find order blocks, we find fair value gaps wherever these levels are. So again, I think I can say this helps you find the right order blocks that are going to be used while you are looking at. And we shouldn't forget that order blocks, fair value gaps are premium and discount arrays. So it's ways to help you find levels where you should be selling. So this is in a premium. So we can say the P in the PD arrays here is working right here, right here, right here, and above that, because this is still a PD array. A previous high is a PD array, a previous low is a PD array. That's why it's working here. It's in a discount, so the D in the PD is working right here. That above 50%, then the push lower same time. So that was 400 points within 30 minutes right here. And then on this day again, we see in the lunch hour it goes above 50% and then it starts making the push lower. And then right here, new day again, so this terminated, even though it can still give you some levels to buy and sell at. So right here we see it just goes in the London session right above 50% and then it starts melting all the way down. Below that, it starts this push higher all the way back to 75% of the move, and then from there it starts melting. And that was Thursday. Friday again, so midnight 8 NFP. Here we see that NFP going higher, hitting that high, and then from there it was melting. Below that here, it was looking for a push higher. Up until now, it's making this move lower like that. So currently, right here, what we have is, so if we go back to the weekly chart, in there this was Monday's range, last week's Monday's range. So in that, we simply just do that, because since this was the first week of March, we're simply just gonna highlight the whole range, get the low, get 50%, get 25%, and get your 75% as well. So currently this is how it looks, and it might seem random, but why do we gap lower to it like that? And then we're gonna have our New York, our Asian session range created around these levels right here. And like I said, what I might be expecting is a push lower to this, or if it goes and pushes above that 50% right here. But I think this is much probable right now here. Since we get below like that, it might be a scenario where we are hitting this Monday range like this, gaps lower, and then we use this new week opening gap later on, maybe Tuesday, Wednesday, to go above it, and then we continue higher to the high of this range. So if you're looking at this, we simply are looking at the same concept in all of this, and no indicators. It's just simply, where is my premium price, where are my expensive prices, where are my cheap prices. And I think this is how it's broken down into bigger frames, small frames, what you might call mid-time frames and stuff like that. And you can absolutely check the 4-hour time frame and stuff like that. your view is totally in your control, because you get to see other things if you are in bigger time frames and smaller time frames as well. So here we can go and find the 50% of this, which would be, okay, let me just put a fib on it. So right there, right over there, we find our 50% and our 75%. So where this move went, as well. And this is a 4-hour fair value gap in the whole week. So the whole week, Tuesday and Wednesday here, we're playing according to, what do you call it, this 4-hour fair value gap, while it's above this 50% right over there. And then another thing you take into consideration when you're looking at a week like this, since it's first week of every month, your Monday, Tuesday, Wednesday are gonna be your nicest trading days. Meaning, and the reason ICT said that is because I think I've seen it doesn't align with your Asian ranges or with your other ranges. Just like how, if you look at, all right, if you look at this, so I'm gonna highlight Monday again. So from this high to this low here, that's previous week Monday. So Tuesday here, Monday, you are simply using Asian range. Tuesday here, we are using Asian range, and Monday's low. So that played out very well here. It played out well here with that. And then as soon as it goes into Thursday and Friday, there are few complications that are related to everything. But these first 3 days of the NFP week are always perfect. And I guess you end up seeing it for yourself with time. But that is basically everything. So here, how it's going to be looked at is, okay, let me delete that. It's just simply taking, since last week's range was the first week of the month, we simply have this in play right now. So just like that, that is all you need for now. Today, as soon as this opens up, you need your Asian range, and then you see how it plays out with these levels in play. You find that it might go above that Asian range to go below this low. And then below this low, it starts a push higher, or it might start that tomorrow. When I say tomorrow, it's already a new day where I am. So when I'm saying tomorrow, I literally mean on Tuesday. So this is Monday already, right here. It says Sunday on this. For the New York people, it's still Sunday. It's Monday already in some parts of the world. So this price that's being created today We are simply highlighting the range, like we highlighted this range, and then from there we are using that range in with this range here to actually find the hidden moves in price. But yep, I'm guessing that is all. I'm guessing I explained everything. PD arrays and whatsoever, 5 minutes, 3 minutes, 1 minute, that's up to you as a person how deep you wanna go into it. But if you have the ways of analyzing, meaning your first week of the month, your first Monday of every week, your Monday of every week, your Asian range, you're basically sorted. Oh, and your first 3 months of the year kind of shows you a bigger frame. So as soon as this March ends, we know we are dragging from this high, January and February and March's highest high, from that high to the lowest low that's going to be created as well in that range, and we use it with the other first week. That'll be, so that range we don't have it right now, so we cannot find some high probability moves because of that. So after that, those are created and stuff, and we are jumping into the 4th month, 5th up to the 6th, we start getting high volatility move then, because we have the first initial liquidity of the year in play. Then we don't have it yet, we are still creating it, we are basically doing its work currently. So in the 4th month, that is going to be used to actually find more aggressive moves as time goes. But you can clearly see, no matter how messy your price may look, it's still analyzable if you are just looking at the concepts in the right way. But yeah, I'm guessing that's all I have to say here. Do you have any question before I end the live stream here?
No, Cedar.
All right, perfect. Have a good morning or a good night wherever you are.